Well, things have clearly taken a turn for the worst here. 10 weeks ago we were sitting around 1600 with this support and resistance line continuing to hold around that 1535 to 1540 area, but once we did break to the downside below this support resistance area, prices went into a free fall. Now over the last 10 weeks or so we've gone from 1600 down to below 1300 in very quick time, and we've also blasted past where we had our wave equality point and also our 50% retracement zone. So these are very deep retracements now, and these are very ugly looking price bars, very wide ranging, closing on their lows. Now we did get a nice market test here, and volume will attest to that as well just here, where buyers did come in. So it did get bought up right on this 50% retracement zone, and that's of the third wave up off the 2001 lows, and we'll take a look at the bigger picture in a second. We moved to the upside. Quite often initial tests on aggressive price points do fail on the first occasion. We've got that on this particular time as well. So we're looking at a second test to come into play. It hasn't come into play yet, and certainly this is another very negative price bar, and that was on an isolated high volume bar just there as well, closing on its low. So everything is still very negative, and I'd say we're not done with this just yet. So from a bigger picture perspective, as you know, we've been watching this larger move off the 2001 lows up to the 2011 highs. Now the 2001 lows are right down around that 450 US an ounce area, right up to the 2011 highs, a 10-year bull run right up to around 1950 there, and since those 11 highs we've just been in corrective mode, or what's looked to be corrective mode, and we've been looking for an ABC move to the downside. Now from an Elliott wave perspective, we're still not done with this technically. The wave 1 or A high comes in at 1104, so technically speaking from an Elliott wave perspective, the larger bullish count is not nullified just yet until that 1104 area is penetrated into. So that's from an Elliott wave perspective though. But if this was a wave 4, really we should have been finding support here. At worst finding support down at the 50% retracement zone or the wave equality area. We clearly haven't got that. We've now got a 61.8% retracement down at 1200, and if we want to even have a look at the bigger picture off those 2001 lows, which is now looking like an ABC move rather than a 1, 2, 3 move to the upside up to the 2011 highs, a 50% retracement of the whole 10-year move is down near 1200 as well. So this is now going to be a very key area for us, this 1200 area, and it is obviously a psychological area as well, 1200 for traders. So this is a big picture area just here. It would hold the technical from an Elliott wave perspective count in play, but for mine, anything for a wave 4 that gets deeper than a 50% needs to be looked on with a lot of suspicion, and also it just has been a very aggressive move to the downside. So everything is looking very much like the 2011 highs is significant, and really we can't look at this in any other way, and won't get into more of a neutral perspective until we get back past and above this old support resistance area around 1535 to 1540, and price is going to have to do a lot of work to be able to achieve that. This is now going to act as a resistance line, and prices, if we do get some form of counter trend move, are more than likely going to reject or find it very, very difficult to get above this line now. There's been so much damage done. But as I said, from an Elliott wave perspective, the wave 1 or A high is at 1104. We'll keep an eye on that, but more importantly just now, the 50% retracement of the full 10-year run higher, right around 1200, 61.8% retracement coincides with that. Price confluence is there on that wave C or 3 to the upside, so 1200 is our next point of view, and we'll just see how things go from there.